Hi everyone, it's James Harte from littlefishfx.com. Thank you for joining me for this week's live market analysis session. In these weekly sessions, we're taking a look at the major currency pairs, running through the key fundamental developments over the week just gone, and also assessing the technical outlook with a look for potential trade ideas over the short to medium term. So as ever, if you have any questions during the presentation, please just write them in the chat function and I'll stop periodically to answer them. Okay, so kicking off as usual with the US dollar. So the US dollar currently supported at the moment, strongly supported by a big jump in rate hike expectations ahead of the June FOMC meeting. We've had a raft of Fed members over the last 2 weeks speaking in support of possible 2 to 3 hikes this year, noting that they see conditions as being right for such moves. And then last week, we also had the release of the April FOMC minutes. So these minutes were decidedly hawkish, with the Fed noting that it would be appropriate to raise rates in June if economic data picks up in Q2. So with these minutes, alongside the various Fed members that we've had speaking, we've seen quite a steady run up in the US dollar. So from a technical perspective then, going back and starting with the weekly chart, for those of you who've been in the last couple of sessions, you'll know that we've been noting that the dollar had bounced from the lower end of this big monthly range. So from the May lows of last year, the September lows of last year, around this 93 level. So we've put in a fairly solid bounce from that support level. You can see that the move was started by this key reversal candlestick on the weekly chart. So we reversed sharply higher from that point, and you can see that we've been trading steadily higher over the last few weeks. We've now come up to quite an interesting area. If we drop down to the daily chart, let me just zoom out so we've got some better perspective there. You can see that last week we were talking about the US dollar approaching this 38.2% retracement level from the last year's highs around the $100 mark. And we also had this key structural resistance level. We noted that we had these previous swing highs and this big previous low. So this is quite an important near-term pivot for the US dollar. We were talking about this as being determinant of whether or not we retrace lower from this point or indeed pushed higher. We've also got this bearish trend line resistance, which is sitting just above this level. So for now, it's still very much in wait and see mode with the US dollar. We can see that the short-term trend here is strongly bullish, and the price action at the moment, you can see this most recent daily candle we had yesterday, a big bullish expansion candle there. So at the moment, it's still supportive of a possible move higher. Obviously, if we do retrace from this point, then an area which I'd be looking at as quite clear support would be this level here. So a retest of the 23.6% retracement level and these previous lows at around 93, 94 mark. So if we do get a retrace lower from this point, I would still be looking for the US dollar to turn higher, and I'd be looking for this area here to act as support. So again, we'd get a sort of inverse head and shoulders pattern setting up there. And then what I would be looking for eventually is a break to the top side where we take out this resistance level and take out this bearish trend line resistance also. Now, whether we break this level in the next few days or the next few weeks, once we have broken this level, the next target, the next two targets really, first of all, we have the 50% retracement level from that $100 mark high coming in at 96.24. You can see we've also got this clear structural level here with support, resistance. So if we do break higher from here, that's going to be the next target for any long trades. And the next area at which we might see some selling interest emerge. Now, above there, again, the next level, and really sticking with the theme here of these key Fibonacci levels lining up with clear structural confluence. So the next level above that 50% retracement level is this 97.26 level, which is a 61.8% retracement from the highs. And you can see again, we've got a really big, clear structural level coming in there. So keeping an eye on the US dollar over the next few days, still expecting that we're going to see a break higher. We don't have much in the way of data coming out this week. We've got some PMI data sets coming up this afternoon with services and composite. So these aren't going to be hugely market moving, but if we do see some positive data, then we could get a move higher. Next key data on the week, so the first tier 1 data for the US is the durable goods number for April tomorrow. So this is going to be the first tier 1 data of the week and likely to draw a lot of attention over an otherwise pretty quiet data week. We haven't had much in the way of tier 1 data. So really it's coming down to keeping an eye on the various Fed members who are speaking again. So this afternoon we have Fed's Harker, Kaplan and Kashkari who will also be speaking. So traders will be paying close attention to any comments made by those speakers. Now, just before we move on to look at the euro, I just want to finish the dollar analysis by highlighting this important development on the monthly chart. You can see here that we've put in a really big bullish engulfing candlestick on the monthly chart. So this is a really important reversal signal. And if this candle does close anywhere towards the top of this current region by the month's end, then this is highly indicative of potential further upside to come. So definitely be keeping an eye on the monthly close because this is a really interesting development. You can see we've traded back down into this big double bottom on the weekly. And so this bullish engulfing candlestick could be the signal that the correction is over and we're about to see some further upside. So with that in mind, let's take a look at the major currency pairs and see how this analysis translates. Okay, so starting with the euro then. So the euro again has been continuing its breakdown recently. The last 2 weeks we've called some pretty straightforward breakdown plays. When we did the first session, we were around this level here. We're anticipating a breakdown. Last week we just broken down and we were testing this current level. And so we've broken down through there now and we're on course to our next target, which is the bullish trend line support at this level. Okay, so when we spoke last week, if we drop down to the 4-hour chart, when we spoke last week, price had just broken down through this short-term rising trend line. We'd broken down through this last key support low here, and we were testing this 112.20 mark, which for those of you who were in the session last week, you'll remember I highlighted this as being the key short-term price pivot for the euro dollar. So we had the 50% retracement from the March lows. We had this big structural support at this level. So this was going to be a really key make or break level for the euro. And you can see that having now eclipsed that, we've actually changed the structure that we've seen recently. So up until that point, you can see that the euro has been putting in a series of higher highs, higher lows, higher highs and higher lows. However, with the break of this key level now, it looks like we're putting in a lower low. And so what I'd be looking for over the coming sessions is a retracement at some point and a confirmation of this change in sentiment whereby we put in a lower high. So if we do get a retrace in the coming sessions, the levels that I'd really be looking for, first of all, would be a retest of the underside of this broken 1220 area. Now you can see from the short-term price action here that we've actually had a retest to that level already. So although it was quite messy, we did break down through that level initially before trading back up to retest it. So ideally what I'd like to see is, and whether this comes from a bounce at current levels or a bounce from a test of the rising trend line support, is a move back up into this 1312 area. So this 1312 area here, you can see the next pink line resistance level around the same area as this recent high, so the February high. So if we do get a bounce up into that area, I'd be looking for that area to provide strong selling interest and an opportunity to get short, anticipating that at some point over the next few weeks, as US dollar rate hike expectations continue to rise and the euro continues to be weighed upon by weak data, low inflation especially, that we get a breakdown through this rising trendline support. We've obviously got key Fibonacci support coming in at the 78.6% retracement area here. You can see lines up with these previous broken highs. So this is likely to be a good area of support. And then below that, we've obviously got the last major swing low at this point here. So if we do get a breakdown through this level, these will be the areas that I'm watching. So to summarize, I'll basically be looking for a situation that looks like this over the coming weeks. Now, obviously, we might break down through this level without any retrace. So if we do, then it turns to going down to the shorter time frames and looking for breakout opportunities. But in terms of looking for a key structural level to set positions against, this looks to be the clearest level, to my mind, that could provide a decent opportunity with good risk reward. Now, if we reverse higher from that point, you can see above there, the next key resistance comes in at these previous broken highs. However, I'm struggling to see the euro getting back above that level. And for now, going on what we've seen with the US dollar and that big monthly reversal candlestick, my gut says that we're going to break lower here. And so I'll be looking to use this trading map to set shorts as we progress. Okay, so moving on to cable then. So the sterling dollar, we've had an interesting development in the picture since we spoke last week. Obviously, at the point that we spoke last week, price was around this level here. So we had marked this level as clear resistance. We put in a false break of this support. So this was the first support that we were looking at. Price had made a false break of that level, traded back above it. Okay, I highlighted this level as acting as possible support, which we could see an inverse head and shoulders for. And so once again, we actually saw that move play out. Price traded down. We got the right shoulder of that inverse head and shoulders pattern, traded higher and broke out above this resistance level. Now, I did note in last week's session that although I felt like price was going to be moving higher, I wasn't going to be looking to get involved with this breakout to the top side, as going back to the weekly candle that we saw previously, so this big reversal candlestick here, I was still anticipating that we were going to get a break to the downside. And initially, once we broke above that resistance level and then failed, I was anticipating that we were going to see a move lower. So once we broke above this resistance level here, traded higher, found resistance at this point, and then started to sell off, I was anticipating that price was going to come down and break this low. So I was looking to get involved to the short side on a break of this low. However, you can see that didn't materialize. Price stalled out and reversed sharply higher. We've since traded back up, and just in today's session, we've actually broken above that current high. So sterling is supported strongly at the moment by a really key development in the Brexit outlook, which is media reports of growing support for the Vote Stay campaign. So for those in favour of the UK remaining in the EU at the June 23rd referendum. So cable is currently reversing higher and breaking out above current highs. Now, in terms of resistance levels, you can see on the daily chart that we've got this triangular formation here. So we've got bearish trendline resistance coming in just above market. And then in terms of structural resistance, the next level is obviously the most recent swing high at the 47.62 level rather. Okay, once we're above there, things start to get a little more interesting. We could see some open room back up to a retest of lows around this level here. So you can see we had that last minor swing high before this cascade and these previous lows. So the next target would be 49.44. So depending on the price action we see developing here, I might look to get involved with this if we get a move such as a breakout above this level, a retest of the broken bearish trendline resistance, and of this previous resistance now, which you can see return to key support. So if we get a move up into that last swing high, a retest of this area, then I'd be looking to get long as we break out, targeting a move to 49.46. So this could be a really good playing cable. Price action at the moment definitely looks to be indicating further upside. So I'll be keeping an eye on this as the week progresses and monitoring for this potential move. Dollar yen then. So the dollar yen, very quiet, not much movement. We got that little breakout last week. You'll remember, for those of you who were in the session last week, price was stalled around this block of resistance here. We were just below that bearish trendline resistance. And so I was anticipating that we were going to get a breakout above that level. And I was targeting a move up to the next key price pivot for the dollar yen, which is this level at 111. So you can see we had this big structural level here with these previous support lows that were broken, retested and held. So I was anticipating we were going to get a breakout above that bearish trendline resistance. Price was going to trade higher, and this was going to be the next key price pivot. So a break above there signals further upside, a stall and reverse there signals downside. We did get an initial breakout, however, price failed to continue higher. We traded back down, retested that broken bearish trend line, and we've since reversed higher. So from this point, still supportive of the bullish picture. So the price action here, you can see once we tested that broken trend line, we saw a fairly strong reversal. So yesterday's daily candle was over 100 pips higher. So at the moment, the next move that I'll be looking for in the dollar yen is to take out this recent swing high and push higher. And really, if we can continue to build from here, then I'm anticipating that instead of seeing selling interest develop into this low, we're actually going to get a break higher. However, for now, we do have to be wary of the fact that the dollar yen simply remains in a clear bearish trend structure. And at the moment, we aren't putting in anything more than a lower high. So for really this picture to change in the short term, we've got to take out this recent swing high here. So the area that we're going to be looking at as being key to deciding the direction for the dollar yen is this band between 110 and 111.80s. Okay, now if we do fail at this point here and trade lower, the area that I'd be looking at to provide clear support for the dollar yen would be a move back down into these previous lows here at the 107.91 area. And this could see the formation of a really clear inverse head and shoulders pattern, where again, I'd be looking for price to reverse higher from the right shoulder and take out this bearish trendline resistance here on its way up to the next key resistance level at the 61.8% retracement. That level also lines up with these big previous lows. So this really is the ultimate target in the dollar yen for bulls, a move back up to a retest of what was the neckline of that big bearish head and shoulders pattern, which we saw break out at the start of the year. So for now, keeping an eye on the dollar yen, watching where we get to over the next couple of sessions. I'm anticipating that we do get a further breakout to the top side. Okay, taking a look at the dollar CAD then. So the dollar CAD has been another really interesting chart. You remember last week that price was holding just below this 129.90s area. We'll call it 130. In one of the previous sessions, we'd actually called this move. We were looking for an inverse head and shoulders pattern to form with price finding support into a test of this left shoulder area. So you can see we got the reversal from that zone, we traded higher, and then we got the breakout above what is now the neckline of that inverse head and shoulders pattern. So with price having moved steadily above that level, the target that we were noting, firstly, was a move up to the current level, which you can see was these previous highs. I'll actually just go onto the daily chart because it's clearer. Okay, so the breakout from this level, we noted that the next key resistance level was going to be here at the 130, 140s region where we had these previous swing highs. But then the more important target for this, or the more important price pivot zone, was going to be this level here. So the 132.70s level, you can see, was this big previous swing high before we had the last set of declines. It also lines up roughly with the 38.2% retracement from the year-to-date highs. So this is likely to be an important area for the dollar CAD. Now, we also have some pattern structure here with a potential head and shoulders setting up. So if we do trade up into that region and get a reversal, then it is likely that that confirms what could be this bearish head and shoulders. However, in line with our anticipation that the dollar is going to continue to strengthen over the coming weeks, then what I'm actually looking for as an ultimate target on this move is a trade back up into the 50% retracement from year-to-date highs, and ultimately a retest of these big broken lows at 136. So this 136 level was a really important support level for the dollar CAD at the start of the year. And it was actually the break of this support level which initiated this big bearish decline. So if the market can trade back up there and retest that level, I'm expecting that's going to be a clear profit-taking zone for longs and likely an area where some selling interest remains for longer-term players. Now, obviously, the Canadian fundamental picture at the moment has been a little bit skewed because although oil prices have continued to trade higher, deriving support from various production outages over recent weeks, we've actually seen the Canadian dollar trading lower. Canadian data recently has disappointed We had retail sales coming out very weak. We've also got the BOC rate decision today, the Bank of Canada rate decision. Although this is expected to be pretty much a non-event, there's not likely to be any volatility as there's no monetary policy report accompanying this decision. So that's the picture with the dollar CAD, looking for this breakout to continue in the short term, moving up towards this target initially at the 132.70s area, and then beyond there a move up into the 50% retracement and this 136.30s level. Okay, so moving on to the dollar Swiss. So the dollar Swiss, we noted last week that we gave a trade alert on the website long on the breakout above here. So we were actually long from 98.10. And this trade is still open currently. I think we're up just under 100 pips. Let me just check what the current price is. 19. Oh, so we're just over 100 pips at the moment. This trade's still open. The target on this trade is a move up into these previous swing highs at the 100 mark. You can see the price action is still fairly supported at this level. So we got the breakout of that bearish trend line that we were anticipating. We got the breakout above the 50% retracement level. And you can see that price actually came back down and retested the broken fib retracement level and held. And this is always a really good sign. Now you'll note this sometimes with these big Fibonacci levels, the price likes to break above them and retest them. And this can be a good technical indication that the breakout remains intact and we can expect further upside. So we're currently stalled at around the 99 mark, looking for price to break out above here and retest the 100 at around the 61.8% Fibonacci retracement from last year's highs. Now, the clear support level in the dollar Swiss at the moment, if we do see a move lower from here, is the breakout zone, which we use to get long. So you can see we've got a really solid support level here formed at these two big previous highs. So if price does come lower and retest this area, then we expect these previous broken highs to provide strong support in line also with a retest of the broken bearish trend line. And we can actually run a bit deeper here to test like this before getting another bounce. So hopefully from current levels, we'll get the continued breakout higher. But if we do get a retracement, then we expect this area to provide strong support for the next upside leg. Below there, the next key support level you can see is this clear structural level at around 96.55. So if it trades back down into this previous support, resistance, support, 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 this is likely to be a level where we do see support emerge again. But again, taking a look at the current price action, still remains supportive of a break to the upside. We've had this big expansion through previous resistance. We're now in a brief period of consolidation, and so I'm still anticipating that the next move here is going to be to the upside. Moving on to the Aussie dollar then. The Aussie dollar, another clear play from last week, over the last 2 weeks really, where we just called for a continuation of the breakdown. So the Aussies remaining under pressure in the wake of that RBA rate cut. We had Governor Stevens of the RBA speaking yesterday. Didn't give much in the way of new information, simply reiterated that he felt inflation was too low, but that the RBA remained confident of inflation returning to their 2 to 3% target in the medium term. Now, last night we did actually have some further data weakness from Australia. We had weak construction data, and we didn't actually get much in the way of a reaction. So this actually suggests that selling in Aussie dollar at the moment is likely overstretched, and there is some risk of a retracement higher. Now, last week we were holding just below. Last week we just tested this initial support level. Just remember where, so we were here. So we just tested this initial support level. And I was saying that we were either going to get a reversal back above this resistance level, or we were going to hold here, trade back down and test deeper into this support level at around the 61.8% fib. So you can see that we have actually broken through that level now. We've overrun that by nearly 100 pips, and price is holding just below there. However, if we look at the price action, you can note a distinct change in the momentum picture. So whilst initially we had these big volatile moves to the downside, these moves have dried up and price action has really started to overlap and get a lot more choppy recently. So whilst the momentum landscape remains low at the moment, it's difficult to call any clear move to the downside. However, if we do continue in the current fashion of simply making an overlapping move to the downside, then the next area that we could look to target, the next area that we might see some minor support kicking in, is back down into this level here. So this is the 78.6% fib retracement from the year-to-date lows. And you can see we've also got some clear structure at this level. So if this overlapping choppy price action continues down to this point, I'd expect some profit taking here and for some counter trend buyers to step in and try and bid the Aussie back up. However, as I say, there is a risk of possible retracement higher with selling so overstretched. And we've got Aussie CapEx data coming out tomorrow. So if we do get a positive surprise there, that could be the catalyst for a retracement higher. Now, if we do get the retracement higher, I am still anticipating that over the short and medium term, we get a further breakdown in the Aussie. And so I'll be looking for levels to set shorts against. And the clear resistance level that stands out at the moment is this zone here. So you can see where we have these two previous highs, which capped the retracements last year, capped the advance last year before we got the breakout this year. So if we trade back up and get a retest of those two broken highs, that looks to be a decent zone at which we could see some selling emerge. And you can see that initially, that was the zone that provided the first decent selling interest on the retest. So once price got below that level, had a hard time getting back above there. So I expect that there still remains some decent supply there, and that could be a level to look to get short against. Okay, and then finally on to the New Zealand dollar. So the New Zealand dollar, again, another stifled chart at the moment. We noted last session that this picture at the moment, this price action period, is very choppy. There's a lot of congestion in this zone. We had all of these really strongly overlapping moves last year, this year rather, in the last couple of months. And you can see that price is currently stalled in the middle of this zone. So we got the retest of that broken bullish trend line. We got the retest of that clear structural level. Price sold off. However, you'll note that in the last session, I did say because of the momentum picture being so low at the moment, I wasn't going to be playing this breakdown as I was anticipating that what we might see occur is a false breakout and a double bottom. And that's actually what we got. So we ran that low by a couple of pips, failed to break down and actually reversed higher. However, we didn't actually break out high. You can see that we've since rotated back down into the bottom of this range. And so for now, we've got a descending triangle pattern forming here. So whilst these lows remain intact, there is still room for further upside in the Kiwi. However, I am anticipating at some point that these lows are going to give way and we're going to get a breakout lower. Now, the candlesticks, the wicks on these daily candlesticks tell you a lot about the demand at this zone. You can see that each time we've traded into this level, there's been strong demand taking price up. However, the failure for price to actually break out higher and make any meaningful move away from here indicates that whilst this demand is currently strong, it is soon to be eroded and we're going to get the breakdown lower. So I'll be keeping an eye on the Kiwi dollar and looking to play a breakdown below that 50% retracement level. The target on that move then is a move down into this next clear support zone. So just beyond the 61.8% fib retracement, you can see we have this really clear structural support zone formed at these previous highs and these previous lows. So if we get the break of the 50% Fibonacci retracement level there, that's going to be the level that I'll be looking to play short into. Okay, so that's all for now, guys. I hope you're clear on those levels and you've understood everything. And good luck with your trading over the week. And I look forward to catching up with you next week and seeing how we got on with those moves. Okay, take it easy, guys. Thanks.